Face reality, not as it was, nor as you wish it to be. That's Jack Welch, a legendary businessman, and he tells us the truth. We have to face reality, and that's what we do here every day at chartingwealth.com. We stare into the eyes of what's really going on in the market, and that is best shown to us by price movement, not by what the financial press tells you, not by what you see on CNBC, on Bloomberg, you read in the Wall Street Journal or Forbes or whatever it might be. Those folks in the end are, of course, giving you what they see as reality, but it's through all sorts of different scopes, and the backdrop always is too, they're in business to sell advertisement. Now, we are looking on our charts every day at price movement, real price movement, what's actually going on, stark reality. That's what we track. And what have we seen happen? Two big things happened on Friday with the S&P 500 and the NASDAQ 100. We saw weekly vertical crossovers. Now, what are those? Those are the waves peaking, and then when the white water starts as the wave crests and rolls over, when it's unstoppable going in one direction or the other, this is a wave that peaked out and is now headed down. We saw the S&P 500 roll over on Friday. We had a weekly vertical crossover going down. At the same time, the derivative oscillator also flipped, which is another good sign for continued down movement. So we now have a weekly vertical crossover in effect on the S&P 500, and it is our job to now track that and see how this continues to play out. We go from the weekly chart to the two-day chart. What do we see there? First day of this latest two-day candle is a down candle for Monday. Price percent oscillator heading down. Derivative oscillator losing some downward momentum, but still quite negative. Price movement is well below the two-day trend line. And again, when we go to look at the jumping in point we told you to look for, we see that 4-hour chart, of course, heading down, hammering down in the afternoon on Wednesday. We see, if we look at that 30-minute chart, we can see where things popped up 9:30 to 10, 10 to 10:30, and then we saw that rollover start happening and then just hammered down throughout the course of the afternoon. High for the day somewhere at 284.03, low for the day all the way down to 280.15. So again, lots of down movement underway. The power of that weekly vertical crossover hammering down. So again, continue to watch. Since we already had our jumping in point, what you now do is step back and keep an eye on that 2-hour chart. I'm sorry, 2-hour. 2-day chart and weekly chart for continued down movement, letting you see how long and hard this will go down. Perhaps this is our summer low that's on the way. Of course, we hear a lot of talk in the media and, well, politics everywhere about China and what's going on there. You could imagine that if there was something worked out and the markets might respond positively, you'll see that play out in price movement. So again, pay attention. There's always something going on out there, but you're going to see any and everything worthwhile play itself out in the charts. That's why it's all the charts all the time. We're back on the weekly chart. We're going to the Qs, NASDAQ 100. Oh, by the way, S&P 500 down 0.93% for the day. The NASDAQ 100 down 0.38% for the day. And of course, we had a weekly vertical crossover here also going down at the close of the market on Friday. And of course, we can see when we had that price percent oscillator flip over going down, so did the derivative oscillator. And we started the week off with a down candle. We go from the weekly to the two-day. And of course, the 2 days continued to move down. Price percent oscillator heading down. Derivative oscillator losing a little bit of downward momentum, but still confirmed down and moving down. We look at that 4-hour chart. Of course, a little bit of a bump up in the morning, but then heading down in the afternoon. We see the price percent oscillator going down. Derivative oscillators about flat. Red spinning top means some indecision tending down. We look at the 30-minute chart, which is what we were looking for. We saw that 30-minute chart. It bumped up in the morning, 9:30 to 10, and then 10:30 we saw a red open box candle. Things then down after that, sliding sideways up a little bit around 12:30, and then the real drop-off started happening in right after 1 in the afternoon, moving down in the direction of that weekly vertical crossover going down. Now, besides the Qs and the S&P 500 being in play, don't forget what we had happening with TLT 20-year bonds going into the 4th week of up movement. We saw things bounce off the red signal line when it looked like things were going to cross over going down, actually for a couple of weeks, the week ending the 26th of April, and then that first week in May, and then bounced off the red signal line and started heading up strongly, up 0.79%. The first day of this latest weekly candle up quite strong looking, and we go from the we go from the weekly chart to the 2-day chart, and again we see that we have 3 strong up candles, derivative oscillator gaining upward momentum, price percent oscillator heading up. We look at that 4-hour chart. That's where you see the jumping in point after we had that rotation over. And again, I was just I'm actually writing a new book for you guys to go along with Charting Your Way to Wealth. If you haven't purchased that book, please do so. Next book is a companion book to that called Optional Wealth. And of course, you can tell from the option portion of that what I'm going to be talking about in there. And one thing that I really harped on is how we use the price percent oscillator and the derivative oscillator together, because they make a nice pair. Those of you who are familiar with what the derivative oscillator is and how it uses the RSI along with the MACD in its calculation, and of course how the price percent oscillator is a percentagized MACD, but with the derivative oscillator you get more of that momentum, overbought, oversold indication. And when you start looking at both the price percent oscillator and the derivative oscillator moving over at the same time, that's one reason when that happens, typically it means that you're going to have a sustained move. Particularly the bigger the charts, the longer the sustaining of the momentum and of the movement. And of course, we see on that 4-hour chart where things crossed over back in the morning on Thursday. Then the jumping in point, of course, was that afternoon on Thursday. Things slid sideways on Friday and then bumped up on Tuesday, both in the morning and the afternoon. I know that some of you jumped into that TLT trade. So again, keep your eye on things as stocks continue to have a hard time. Typically, bonds are a place where money flees, so we would hope to see bonds continue to move up if the stock market is going down. And of course, that practice trade is still running quite nicely. So again, we've got the potential of 3 things. Remember how over the last, month or so, 3 weeks or so, we've been talking about how very little has been happening as the market sorted itself out? Well, the sorting may be over at this point. Now we move from 20-year bonds back to the weekly chart and go to gold. What is gold doing? Well, of course, gold crossed over going down back on the week ending the 29th of March. And we see the week starting off so far with a down move. Derivative oscillators still negative. Price percent oscillators tipping over, heading down a little more. We go from the weekly to the 2-day. What do we see going on there? Again, waiting for gold to punch down at some point potentially and move through that 119.80 or 119.50 mark somewhere along those lines. It actually punched all the way down to that 119.54 back in early May. And what we're waiting to see is if indeed things are going to rotate back over going down strongly. We still are positive on the 2-day price percent oscillator, but the derivative oscillator is losing lots of momentum. Price percent oscillator may be getting ready to rotate over, going down. We're just going to have to wait and see. 2-day still in a confirmed up move. Weekly's in a down move, so we don't have a jumping in point yet. We look at that 4-hour chart, and it's not crossed over going down yet either. Down in the morning, a little bit of recovery in the afternoon. Again, gold still down for the day, 0.39%. So we'll see how gold ends up sorting itself out. Those of you who jumped into these practice trades, again, follow them, learn by them. I hope you have filled out your trade worksheets. If you don't have a trade worksheet, look in your show notes. The PDF is right there. You can print them out, fill them out, use them throughout the course of the trade. They are so valuable for helping you jot down what you're thinking while you're in a trade, and they will be invaluable to you after you close the trade, successful or not, in helping you learn the most that you can from your training. Remember, practice trading is cheap, and it prepares you for the fortunes to come in the future when you master what you are doing. Too many people don't practice long enough. And remember, practicing doesn't cost you anything. And I'm telling you, there's plenty of time to make all the money you will ever need if you will just spend the first months or years of practice intelligently, actually practicing, not with real money, but with virtual dollars. Doesn't cost you anything except the 10 to 15 minutes you spend with us every day. That's all we ask, 10 to 15 minutes a day for greatness. If you haven't purchased our book, support us a little bit. A little payback would be appreciated. You can buy the book in the show notes. You'll see links, and we'll ship that book wherever you live in the world. If you happen to live overseas, for some reason Square will not clear your credit card, if you'll simply email me, cw@chartingwealth.com, I will send you a PayPal invoice. You pay that, and we'll ship your book wherever you are in the world. If you live in the States, just follow the link in the show notes, buy the book. We'll get it shipped out to you. I think we're in our, gosh, I can't keep up with them anymore, 10th printing? Anyway, we appreciate you guys being with us. If you really want to help us, become a Patreon supporter. Lots of great benefits for our Patreon folks. Our next Patreon call-in for any of our levels of support, the first, second, and third level, any of those levels of support, that next call-in is going to be the 5th of June. And if you have stocks or ETFs you want us to review for you, Patreon members, go ahead and email me, and we will make sure to put those on our list, do what we can to get to them in our next recording so that you have them. And again, June the 5th for our monthly question and answer live call-in session. Thanks, my friends. God bless. All the best from the whole team here at Charting Wealth World Headquarters.